Welcome to the Swing Trading with Cycles channel. We're going to cover natural gas today on January 27th, 2023. And as we looked at in the last video, and just a reminder, just a constant reminder, candlesticks, charts are just a visual representation of data. The data that they represent is it right here, right? Open, high, low, close, your volume, you can add to a chart, obviously. This is just another way of looking at that data. And one thing that we called out is you can look, for instance, at how many times, like what percentage below the 10-day moving average we closed over the last several days. And you can see that we've closed, I think it's been 27 days in a row. And obviously you can see before that, anytime you're green here, you're above the 10-day, and every time you're red, you're below. And you've had periods where, obviously when it's red here, you're in a downtrend. And we talked about the really, really bearish period in July 2008. So we started a vicious downtrend. You can see it, right? Like if you just like look, you see green, 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 a little red. Okay, that's okay. That's just an uptrend. This is a little higher low. And then you just see a sea of red starting on July 6, 2008. And we just keep going and going and going. This period lasted 38 days, it was, I believe. So we could still go longer, for sure, not closing below the 10-day. But notice, look, it happens. It happens because this is just showing you, again, the percentage above the 10-day moving average that we close. And you can see that where, like, it does not, like, you can just, like, you can see it's not, it's not like it's some kind of mystical thing. That's just how price works. We have higher lows in a downtrend. So at some point, we'll get that bounce. It'll probably last a couple days. Again, you can see this in for some periods, it only lasts 1 or 2 days, and you just kind of keep going lower. But at some point, we're going to get that. And it does look like we're trying to put in a little bounce here. So right now, we do not have a swing low. And wow, just a minute ago, this is a daily candle. We're zoomed in here. Just a minute ago, the daily candle was was green. So always important to know the opening price. Opening price was 2.853. That's where we opened. Again, this is a Friday, January 27th. And so we were above 2.853, and now we're obviously below it, so we're red. So we're kind of oscillating between red and green. And we'll see, look on lower time frames. We've essentially entered somewhat of a range on the like 1 hour, 4 hour, 8 hour chart. And so now we're going to see if we can break out of that. In order to make a swing low and have a chance at a bottom, we have to cross above this line here. I mean, today we'd have to cross above this line. Technically, if we just close today exactly where we are, we just need to cross above the high of today. So the high of today is 2.908. Those are important levels. If we move above 2.908 on Monday, that gives us a daily swing low, and obviously we need to close above there. As of right now, if somehow it's about 2:30 p.m. we could have some kind of crazy move in the next couple of hours, and we close above, it's 3.003, which would be the high of this candle. That would mark your swing low today. That would obviously be incredibly bullish going into the weekend. I have a feeling that's not going to happen. What I'll say also just broadly, and definitely take a look for a link in a pinned comment for links to understand cycles analysis, which we'll talk about a little bit here, but I won't go into too much detail. It really helps you to it really helps to frame up when you should be more aggressive versus less aggressive. And I think one thing that comes into play there is position sizing, right? If you're really early in a new cycle, then you can be more aggressive, larger position size. The trend might last for longer. If you're later, then that's different, right? And right now, we're really late in the daily cycle. We're at day 35. You can see the previous one ended day 30, day 33. Take a look at the video. It goes through great detail about how the process kind of works. And one of the things that you look for to confirm a new cycle has started is a close above the 10-day moving average. Again, we haven't done that since December 16th. So it's been basically a month and a half that we haven't closed above the 10-day moving average. And you saw, if I like zoom out, like that 2008 period that we were just talking about, right? Like you can kind of see it on the chart. Again, that was the Excel version, but this is the chart version, right? Like, again, it's the same data, folks. So when people get kind of hung up on the chart, relax. It's just a visual representation of data, right? Just helping us understand price ranges and trend. But you can see where it fell off a cliff and just could not close, got close, could not close, finally got a little close here. And then what happened? dip down. So I'm not even saying that this bounce is going to be huge. And I can see already in the comments, you can't compare the decline of 2008. I'm not saying we're declining for the same reasons. Declines never happen for the same reason. That's obvious. It's just, this is just a point of price action. No matter how vicious the decline, you're going to get that close above the 10 days. So you can see, actually, I'll zoom in, make sure we can see that. That is your close. That's a close above the 10 day, and then you get rejected, make a new low. Then you close 1 day, 2 days. This day started green. You know that because it has an upper wick. So it looked like we were still maybe had a chance. So you had a little, I mean, from here to here, a little 3.5 day rally. And then you go on to make a lower low, lower high, chop around here a little bit. But again, you can see then we start to close above the 10 day again. So at some point it will, and that's going to be an important signal. At the same time, this massive decline suggests we could be falling for several months sort of to come, right? And we've talked about seasonality before. Yeah, I believe I posted this on Twitter. This is just you using UNG as a proxy. This shows you the seasonality for over the last 16 years. And, you know, 73% of the time, April is positive, whereas 33% of the time, February is positive, and only 38% of the time, January. We're obviously having a crummy January. We had a pretty crummy December. I mean, that was a terrible month, and that only has a 31% chance of being up, right? And so it wouldn't be, like, price action is key, always key, but it's helpful to see these it's helpful to see these other sort of data points that might also suggest, okay, it makes sense. We've had this precipitous decline. It would make sense that price is going to take some time to either it's going to continue to decline or it's going to at least build a base, right? Not necessarily go kind of straight up per se, right? And so the other thing I want to just say quickly is for the, it just seems like from the comments, people aren't using stop losses. If you're not familiar with what that is, you can look it up. There's a ton of detail on Investopedia on different kinds of stop losses, like trailing stop losses, limit order stop losses versus market stop. Like, it's an incredibly important tool, especially when you're trading something as volatile as natural gas, either like Boyle or even like a UNG or KOLD, etc. And the other element of that is position sizing. At some point, we're going to get pretty good confirmation that we've started like the next kind of big up move, right? And at that point, that's when one can be aggressive and increase the position size. But for now, you want to keep position size small. We don't have, I mean, if traded at all. I will say also, other markets are breaking out. Uranium is doing really well. And it's breaking out versus the S&P, and the S&P itself is breaking out. It is a little bit later in the weekly cycle, but there are easier places to make money than natural gas right now, I will say. The dollar is basing, so UUP is looking good. Take a look on the channel. We review all of these. And so we're on day 35 of the daily cycle, so pretty late. And we think about the weekly cycle. If you think about this as one short one, this is week 13. And, we've been declining for basically 9 weeks in a row after this week 4 top. So we rallied for 4 weeks, declined for 9. And there's a pattern that's developed that we're, and I think we talked about this in the previous video. We open as an inside week. So this week, for instance, we're looking at here, right here. So the week of January 9th, right? We have this, it was a down week. We made a lower low below the previous week. And then the next week, we opened as an inside week, right? We opened right here, right? So we opened inside the range of this candle. That's what these lines are. We had drawn that for that week's video. And then we proceeded to make a new low. And then what happened this week? Same playbook. We opened inside the range of the previous week, and then what happened? We collapsed below it. So what do you think was going to happen next week? Obviously, we can't predict future price action, but it's very likely that we'll at least open as an inside week, the same way that we did for the previous 2 or 3 weeks. And then it's going to be a question, do we break to the upside of the range or the downside of the range? Now, here's the good news. The upside, so the high of this week is 3.595. I mean, think about that. That is, I think that's like 30% from where we are now, isn't it? Like something like that. Okay, like 27%. So said a different way, price would have to increase 27% to make a higher high on the weekly chart to to tell you that the weekly downtrend has or to give you a chance that the weekly downtrend has ended, right? Because that's how a downtrend ends, right? In order to end the downtrend, you need to start making higher highs, right? And so we need to make a higher high. This is our weekly candle this week. Like just to kind of spell it out, we need to do something like that, right? So, and again, based on where we are now, to do something like that would take like a 27% move. So that's the interesting thing, is that if we do get a bottom, it'll be really clear that it happened. And think about it. Do you have to buy it like right here, or could you make money buying it like here and here and here if it is the bottom, right? Either way, no matter what, please, again, make sure that I would just say at least look into stop losses. It's painful to read in the comments. It just sounds like, people are saying they're in since so much higher. And it's like, well, how is that possible? Like, where was your stop loss? And obviously be aware that these things gap down massively in the mornings. So being long overnight with a stop loss can mean you take a lot bigger loss than you assume you will. These are very violent products, which is why, again, I go back to position sizing. You want to make position sizing is a superpower. I say it's a superpower. You want to put your thumb on the scale when it makes sense, when the odds are in your favor. And right now, that's not where we're at. We don't have a very clear signal. Again, not in this market, but I will reiterate, other markets are like SMH, the semiconductors, are signaling we may have a bear market low already. Now, obviously, we have FOMC next week, so be aware of that. That's going to move natural gas as well, obviously. But we may have a potential long-term bottom in the broader stock market. So as we talked about, this is our monthly chart. We're into this zone here, and we're also another milestone. We're on pace to close below the 50-week moving average for the first time, right? That's this teal line here, pretty meaningfully below it. So it's up here at 3.684. So it's always good to have that context, right? Price would have to rally about 30%, right, to get back there. So similar to making that weekly high. So that's going to becomes an important sort of milestone to get back above that eventually. And again, there's every reason to think that we could find ourselves down at 235. That's not a prediction. There's no such thing as guarantees in the markets. No one can predict future price action, but given that we're in a downtrend on the monthly chart, right? Unless this thing stops soon, and to be clear, we can get a daily cycle low and still be in a downtrend on the monthly chart, right? Like we can be in an uptrend on the daily chart and still be in a downtrend on the monthly, right? We could do something like this and then that, right? I'm not saying that's what we're going to do, right? But that's what you have to be prepared for, because this is a downtrend, right? And to be clear, this downtrend on the monthly chart, we have to go above here right? So we have to go above this month's candle. So that's 4.394. Again, always helpful to have that context. So price would have to rise. Well, that's great though, right? Because that means also, I suppose, the way of looking at that is that there's a lot of upside, right? Like we'd have to, so another way of thinking about that is we could have a 57% move up and it could still end up being a lower high that takes us down. Man, this is a wild one. I mean, I see why people are so interested in this commodity. I'm relatively new to it myself, just using price action as it sort of is universal across things. So that's the kind of lay of the land. Just more waiting, and let's look at the lower time frames. You can see on the 8-hour chart, and then we'll zoom into the 1 hour chart. I posted this on Twitter. This candle was on pace to become a bearish outside candle. So again, super important pattern to understand. The pattern of an outside candle. It's when a candle makes a new high and a new low relative to the previous candle. It makes a new high. It makes a higher high and a lower low. That's a very dynamic. Event, right? Because it gets people off sides. Again, another way of thinking about that is it's a false breakdown or a false breakout on a lower time frame. Always. That's how it works. If you get a false breakout or a false breakdown on a lower time frame, guaranteed it's going to be an outside candle on some higher time frame. So on this 8-hour chart, we made a higher high. It was green. Then we went red. And then we reversed before making that lower low. So that would have meant making a lower low below the bottom tick we already have, that 2.747. So we haven't done that yet. But I would say in general, what's happened here is we're now consolidating, right? It's pretty clear. Look at this line. I mean, or I should say, look at this time period where we kind of bounced around this range. And again, as I say, don't get hung up on the lines. The lines aren't doing anything. The lines are a visual representation of a price range. So we were bouncing around between essentially 3.918 and 4.459, somewhere around, like pretty wide range, obviously. And then we broke down below that range, and then what did we do? We came up and we were just right on the lower end of the range, which is ironic because this, you could say, was a kind of a bull flag of this little move, right? Yet it's actually still on the lower end. So it's good context that something can be a bull flag and a bear flag at the same time, kind of, sort of. And this was also our first time closing above the 10-period moving average. Again, this is on the 8-hour chart, so you can think of this as like the 80-hour moving average for all intents and purposes. But then we collapsed below it, right? So you can almost think of this as a bearish test of the underside of this range, and so this range becomes an interesting target, right? Call it the 3.459 area. What happens when price gets back up there? And again, for context, how far away are we from that level? That's about 21%. So you could see even a 21% bearish rally, or maybe it's not a bearish rally. Maybe it's the start of the next up leg. And so this candle is starting to dojify. It's starting to become a doji, which tells you we may be in for more chop. Because again, it's the same principle we talked about for the weekly and like the inside candle on the weekly. We're on pace for an inside candle on the 8-hour, right? And so you can see a world like what happens if we start doing something like that, right? Like just kind of rangy, similar to what we saw there. And of course, this resolved lower. This doesn't have to resolve lower. It could resolve higher, right? We could resolve up. We could go up and then back down. We'll have to see. We can't predict that in ahead of time. But you can kind of see that's what's starting to develop, where you're going to start to have this kind of random chop going sort of back and forth. I mean, you can see KOLD and BOIL. I think they're like, one is up like 1.5%. The other one is down 1.5%. When you have a day like that, that tells you there's a lot of chop. It's kind of ugly. And if we think about we look at the hourly chart, you can kind of see the finer grain detail, but it's the same kind of idea. Like this just choppiness. You can see just a sideways action. And on this time frame, again, these patterns are everywhere. This was trying to become a bearish outside candle. It's obviously not. So it's got 21 minutes to close, and it looks like it's holding right now. And you can see actually this is a series of higher lows. So this is trying to bottom here. Now, what we would be looking for is for it to be pressing up against the upper end of this range a little bit more. And that will tell you it's more likely to kind of break out and above. Again, doesn't mean it's the bottom, but it just kind of gives you an indication. So let's move on to BOIL, and we'll do BOIL UNG, and we'll look at KOLD. So again, stop losses, folks. This thing is making all-time lows every other day. Let's go to the daily chart. So that's interesting. BOIL is closer to making a swing low than natural gas, which, if you want to look for reasons to be bullish, you could say that's telling us something, right? That it's like kind of front running it. So we really need to get above the clear level here is 844, and we're here at 826. It's a doji, much like natural gas itself. And if you think about the upper end of that range, like the equivalent, that level that we were talking about for natural gas, that would be the same thing. That's interesting. So it would be about the same increase, even though this is supposed to be like 2x. So that's about 24%, because the lower end of that range was around $10.26. Although you can see, that's interesting. Yeah. I mean, they diverge sometimes, obviously. And if we look at the 10-day moving average, let's just throw that on there. We'll do that really quick. Because again, same kind of idea. This thing is going to close above it eventually as well. There it is. So 10-day moving average right now is at 965. But keep in mind, the 10-day moving average is going lower every day. So it's not going to stay at that level. It's going to be lower every day we go because we're in a downtrend because we continue to move lower. But we'll see if this is the beginning of this is starting to sort of abate a little bit. And this is your hourly chart. You can see, okay, yeah, it's holding up here on the hourly. you have a series of higher lows, right? Like you have, this is the last significant low down at 786. So again, this is what I talk about. This is how you think about, like, there's a reason that you look at those significant lows. That's where you might place your stop loss. Again, folks, stop losses, they're magical. That's how you can lose $50, $100. Like, you can control your risk versus being down like 50, 60%, right? So like, if price were to go below that, that tells you this is probably failing. Now, obviously, it could be a false breakdown. This thing is really sort of volatile, but it will at least allow you to control your risk. Now, I would say that's not an amazing risk reward. So what is that? That's about 44 cents of downside. And you can say like you're playing for this level here at like 973. So that, and you know, that gives you sort of, what is that? So, yeah, so it's only about a 4-to-1, which is not bad, obviously, but for something like this that's so incredibly volatile, I actually prefer for the risk reward to be higher, closer to like 7, maybe even 10-to-1, like realistically. And honestly, this is probably an aggressive target to get all the way back up there. I mean, let's see, what would that be in terms of percentages? Yeah, it's about 20. Yeah, so that's you're getting back to that upper rail. So those are the levels on Boyle. And again, same kind of idea. The weekly chart has been making new lows. And you can see this candle is much more doji-like than the candle for natural gas, where there's less of a upper wick. And that's because Boyle is actually outperforming natural gas. Again, interesting. Retail jumping in here. So the range you want to be aware of is 1084 and the low is 733. So we'd need to get to a move above 1084 to make a new weekly high, and that would be about 32%. So again, this is interesting. A new weekly high for Boyle is the same percentage increase as a new weekly high for natural gas itself, and you would think that would be a little bit higher since it's a leveraged product. And let's look at what the monthly is, right? Like, so again, that's the same kind of idea of like, if this is really bullish, if we are making a real move, we would need to get back above this month's high, right? And so that would mean a move of, okay, that's a little bit better. So we'd have to move 87% to get, again, so just like to make sure that we're just crystal clear, like that's your visual, right? Like you need a candle to do something like that to start to reverse this, right? So then it's like, oh, okay, maybe we're doing that. Again, incredibly risky. There are much better risk-adjusted trades out there. The broader market is breaking out, potentially as confirmed. And obviously we have the FOMC meeting next week, so we all want to be a little bit careful, cautious there, but we're at a very potentially important turning point. UNG, same idea, same pattern. For UNG, needs to get above $9.78 to give you your daily swing low, and your weekly level, also same kind of idea. It's also more doji like. It's going to be an inside week next week to start at least. And those levels are a high of $11.06 and a low of $9.15. And finally, KOLD, which would be rolling over here, right? And so what we want to see from KOLD, what you'd need to see from KOLD is actually a move below 38.56, which would be your new low on the weekly. But before you do that, you see you actually already have a swing high from KOLD. That's interesting. So again, it's telling you something here, right? Potentially. Because that's a move below 48.63, and we're here at 48.43. So KOLD actually already has a swing high in place. Let's see if it closes below that, obviously. Again, that's just another sign of natural gas trying to sort of find the bottom. The same way that KOLD, it's the reverse, right? The same way that nat gas at some point is going to close below its 10-day moving average, the same thing is going to happen to KOLD. I mean, look at this. KOLD hasn't closed below its 10-day moving average since December 19th. It's been up, up, up. That's this blue line here. Up, 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 right? Well, actually that's a close. That's interesting. So yeah, that's a close. So that's actually showing more weakness than natural gas was showing weakness, which again is actually net positive. So it'll be interesting to see how this kind of shapes out. We'll continue to kind of watch this, but we'll kind of leave it at that. Thanks for watching.